Hi there. In this session, we will have a discussion about the scope of IFRS 15. It's very much important for us to understand the areas for which IFRS 15 is not applicable. So let's go and let's have an understanding on that. The learning outcomes. After completing this session, you will have an understanding about the following five areas. The first is the scope of the IFRS 15. The second one is the impact of IFRS 17 on revenue recognition. So let me tell you, IFRS 17 deals with insurance contracts. Third point, pro rata revenue recognition. There may be certain circumstances where some part of the contract may be falling within the ambit of IFRS 15 and some part may not be falling within the ambit of IFRS 15. So how are we going to tackle those areas? So we will have a brief discussion on that. The fourth part would be the contract cost. It's a new concept being introduced in the IFRS 15 itself. So we're going to have a very brief overview on contract cost. And the fifth one in the gain on the sale of non-financial assets. So this is an amendment that is brought into the IFRS 15. So we're going to bring this into the light. And here we go. The first one, the scope of the IFRS 15. IFRS 15 applies to all the entities and all the contracts with the customers. So please make sure that you comply with the definition that has been given in the IFRS 15. So it's applicable for all the customers and to which to in respect of providing goods or services in the ordinary course of business. Likewise, we have four exceptions from this rule is that it's not applicable in case of lease contracts. Any revenue from customers that we are getting in terms of lease contracts which are covered under IFRS 16 or IAS 17 are not within the ambit of IFRS 15. The second point of view is the insurance contracts. So any gain or any revenue that we are recognizing from insurance contracts are not covered under IFRS 15. The third one will be financial instrument and any other contractual rights or obligations. So that's like any gains or any income that you're recognizing from financial instruments. For example, interest income. It's covered under the IFRS 9 concept, so it's not covered under IFRS 15. And the fourth one would be the non-monetary exchanges between entities in the same line of business. I just want to quote one example. The standard will not apply to a contract between two oil companies, suppose oil company 1 and oil company B, that agrees to exchange oil to fulfill the demand of their customers in different specified locations. So for example, if A Limited enter into a contract with B Limited and both are in the oil fields and oil supply field, and they enter into a contract that if a company B sorts of oil reserves, then in such a case the company A will supply the reserves to company B, so fulfill the demand on the in the area where company B generally operates. So these are basically non-monetary exchanges and which are out of the scope of IFRS 15. Now let's understand the impact of IFRS 17. Like due to the introduction of IFRS 17, certain relating to the insurance contracts, basically, there may be some impacts in the fixed fee service contracts or fee service businesses. Like fixed fee contracts can be looked into as a hedging instrument and which may be accounted under the or a risk management tool can be accounted under IFRS 17. Hence, the board gave an option to any entity which satisfies three conditions. Either they can apply IFRS 15 or they can apply IFRS 17 in respect of those revenues. Let's read out the slides. IFRS 17 permits entities the choice of applying IFRS 15 instead of 17 if certain conditions are satisfied. The first condition is the entity does not reflect an assessment of risk associated with an individual customer in settling the price with the customer, which means it should be for the general public as a whole. And the contract compensate the customers by providing services rather than just making the cash payment, and the insurance is started by the contract arises primarily from the customer's use of services rather than just uncertainty over the cost of the services. Basically these 3 points are more of an insurance thing. So if any conditions is not satisfied, then in such a case the entity have to account for these contract under IFRS 17 rather than on 15. So if all the conditions are satisfied, the entity has an option to record it under the IFRS 17 or under IFRS 15. The pro rata revenue recognition, they are and like the entity may enter into a transaction which may be partially within IFRS 15 or outside the scope of the IFRS standards. Then in such a case, the standards require the entity to separate those operations or separate the measurement of income from those sources and to apply the requirement of other IFRSs before applying IFRS 15. So this is the requirement for bifurcation. The contract cost. So there may be some cost that we may have incurred to obtain a contract. So those contract costs can be capitalized and amortized over the period of the contract if certain conditions are met. Then in such a case, this is a very new concept of capitalizing a contract cost or any kind of a cost that has been incurred to obtain the contracts. So we will go through in detail in this thing, but this is a new thing that included within the scope of the IFRS 15. Last but not the least, a gain on sale of non-financial assets. So this is basically an amendment in the revenue recognition standards to include the gains on non-financial assets such as property, plant and equipment or intangible assets. So the standard specifically deals with two areas. The first one is the control. When to say that we have a gain or loss, which means when we de-recognize there is a gain or loss. Now the question is when we can say that we have to de-recognize. We have to de-recognize an asset when we lose the control over that particular asset. So to refer to the definition of control, we have to refer to the IFRS 15. So there is a significance. Whenever there is a loss of control, you have to account for it as a gain or loss, and to understand uh, whether there is a loss of control, we have to refer to the IFRS 15. And the second point of view is the estimation of gains and losses, because IFRS 15 also deals with how we can estimate variable considerations or consideration uncertainties if you're not able to judge the amount that we're going to received from the sale. Then IFRS 15 will come into picture, and these two specific areas will help you understand how to recognize a gain on sale of non-financial assets. So these are the major two areas where IFRS 15 plays a very important role in the recognition of gains and losses on non-financial assets. So this is the entire overview that we have discussed on the learning outcomes. The scope of IFRS 15 we've discussed, and where it is not applicable. The impact of IFRS 17, like the risk management thing, we understand there may be contracts which are coming under the IFRS 15 and 17. If certain conditions are met, then in such a case, the entity has an option to record it under IFRS 17 or IFRS 15. The pro rata revenue recognition, the entity has to first think about the other IFRS's perspective to bifurcate between the IFRS 15 part and the other part. If nothing is mentioned, we have to follow IFRS 15. The contract cost, we may incur some contract cost that we need to capitalize under the IFRS 15. That's a very new concept. And gain or loss on non-financial asset. So just this is the entire structure, and if you have any kind of a doubt, just post it in the comment section. I would be able to answer it as soon as possible.